Okay, everyone, we're wrapping up our Godfathers of Tech Week now on 3 versus Trish with the granddaddy of them all, IBM. Big Blue stock has really taken a big leap recently, up 165% in a little over 3 years to an all-time high. But with the PC business in the rearview mirror and cloud computing being the thing on the horizon, can the original tech godfather keep up the pace in 2012? Well, we'll see. We got 3 ways to trade this one for you. Bloomberg West, Corey Johnson has the fundamentals. Andrew Keene is tracking all the charts for us. Mark Sebastian has the options trade. We're going to get the lowdown on this one. We're going to start here with Corey. You know, Corey, when I think IBM, I think tech, but I also think somewhat, industrial, because you're thinking of a big, solid company, the kind that's giving you dividends as opposed to big-time growth.
The dividend here is 1%, 1.5% or so. Not something that's spectacular when you look at big cap tech, but big is the right word here with IBM. I mean, all the numbers. I read the annual report today for the first time in years, and the numbers are just big. These guys are doing $1 billion a year, for example, in intellectual property. They've just got so much. They've received more patents than any other company in a row for 19 years in a row. But there's I was looking at this thing, there's some concern about Europe, and a constant currency last quarter was down year over year in Europe. But really, when you look at these guys, their strength in Europe is actually strangely in Spain. 5 quarters of growth there in Spain. Their software business is their fastest growing business and their highest margin business. And then, their services margins are getting better. So a lot of things improving, really steady growth. And, from a stock basis, from a growth basis, not super expensive. Okay,
so not super expensive. You like this company with its international scope, despite some of the international headwinds out there. I'm wondering what the technical view is telling us. Andrew, you're watching the charts. What are you seeing? I mean, which way is this stock heading? Where's the opportunity for investors?
Yeah, it's definitely headed higher. It's just a matter of time. The stock chart looks very healthy. If we take back to 2009, when it's trading $125, it trades like in these $25 ranges. So it traded between $125 and $150. It took about a year to get out of that. Then it traded from $150 to $175, which took less time. It took only 10 months. Then from $150 to $175, it took about 8 months. And now it's taking even less time. It broke this $195, which is key level here. It's way above all the moving averages. It's going to the next leg. I think the next leg is 220. I just put 195 plus $25 on top as the next leg to 220. It is over $200 right now. I don't want to get long any stock on the all-time high unless it rhymes with Apple, to be honest. I would like to get a pullback to around 195, 196. Then I'll be looking to get long. Yes,
okay.
Of course.
Mark, do you agree with any of what Andrew's saying?
Well, I think Andrew's missing one thing. What can stop IBM? Not IBM, but the financial markets and systemic risk. I think that's a major issue here, and why I don't like going just flat out long the stock at an all-time high. Now, does that mean I don't want to find a way to get long IBM at an all-time high? No. What's going on? Insurance premiums on IBM options are in the floor. They're really, really cheap. So rather than go out and buy the stock, why don't we buy the April 200 call for about $5? It's going to give us exposure into earnings. It's going to let us ride any earnings anticipation up. And you know what? We're going to be safe below 195 if our friends over across the pond have another problem, which is, not without the realm of possibilities.
Andrew, you like that?
Not really, because the stock has to appreciate already 2.5% for that to be a winning proposition. I'd rather be looking to sell a put spread here than buying a lot of premium. That only gives you about 4 weeks, and you're buying premium already.
Selling the puts with vol this low is asking for problems. If the market blows up, you're going to run into some really, really major issues. Now,
to be honest, I'd rather see it sell out. I would like to see it sell off to 196 and then sell the 95.90 put spread in April. Then buying premium up here. You have a weekend coming up. I think it's $5 with the stock trading 270 cents. You have $4.30 of premium. That's too much premium for my liking.
All right, we're going to finally give last word to Corey here. Last word goes to Corey. Now, Corey, you can't tell us whether to buy or sell this stock. You're a Bloomberg employee. You're a journalist. But give us your sort of overall outlook for this company over the next 12 months.
It's such a short-term view to figure out what's going to happen with IBM over the weekend. I mean, look who the largest shareholder is, Warren Buffett. He's not thinking about what's going to happen with the stock over the weekend, and most investors are not thinking about their returns in that fashion. When you read through the annual report of this thing, and I encourage you to look at the stock to do that, They're going into some businesses that are growing very fast. They've got this annuity-like stream through business unit after business unit after business unit. Margins are getting bigger. Over time, that's going to be a good thing for this company.
All right, we're going to have to leave it there. Thank you so much. A heated, interesting debate and discussion, the kind I like. Here's the cheat sheet for all of you. You heard Corey Johnson. He likes those fundamentals with a few reservations. Andrew Keene, he's seeing a big uptrend for Big Blue. Mark Sebastian has a bullish trade on. He says buy the options instead of the stock. But, of course, we did hear some disagreement there between Mark and Andrew.